All you have to do, write this in your journal right now, okay? For you to quit your fucking job, to quit your job, all you have to do is find something that repeats every day that can yield you 5 handles. Here's the easiest, most straightforward ICT lecture. Ready? Watch price in the morning between 9:30 and 11 o'clock. Wait for price to run through a liquidity above or below. Don't even have a bias. You don't care about a bias. I want to see an obvious run above a high or relative equal highs and then reject that. I want to see an opposing liquidity pull. I want to see it move sharply in that direction. Once it does that, any fucking fair value gap, any of them, once that occurs, as soon as it trades into fair value gap, I'm using that. I'm putting a 5 handle stop loss on it, and I'm waiting for it to rip. 5 handles, half my trade's coming off, and then I'm waiting for it to trade into the opposing liquidity. There it is. And in 90 days, I'm quitting my fucking job.
So, you heard it here first, but before that, what's up, traders? I'm Hotshot. This channel and video is for entertainment and my own learning purposes only. This is not financial or trading advice. Please trade at your own risk. Now, that video right there, that was ICT saying himself, this model, perform it for 90 days, and in 90 days, he himself is quitting his fucking job. And I don't see why we can't do the same. And the model that he is specifically referring to is his silver bullet model. And the silver bullet model, he says begin at 9:30. Okay. Now, at 9:30, we can totally do that. However, in his March 25th and also March 30th Twitter spaces, you can go check them out. They're free on YouTube. You could just look up ICT Twitter space March 25th, ICT Twitter space March 30th, and you can listen to it for yourself. But he says specifically there are macros that take play. And there's one macro specifically from 9:50 to 10:10. This macro is the macro that does the run on liquidity. After that, between the 10 o'clock and 11 o'clock, in that time window, you will see the displacement rejecting that liquidity run, going the opposite direction, and you will identify a fair value gap. And any fair value gap, you're taking your entry off of it, you're putting a 5 handle stop loss, targeting 5 handles. And at that target 5 handles, you're taking 50% of your trade off, you're paying the trader, and then you're going to reduce your risk to halfway between the entry and original stop loss. I got it right here step by step. Before I get into that, I also wanted to answer a question from the last YouTube video. So how do I know, like, let's say you go loss, and then a win. This right here is the ultimate risk management system that you could use. You could take so many losses and you will not fail a funded challenge. I can almost assure you that. With this right here, what you really want to pay attention to, you guys, is how much your account is down in total. Let's say you're trading, right? And let's say all of a sudden your account is down 3%. What you're going to do is you're going to go through and you're going to identify right here where it says 5 losses in a row, there's going to be a total percent down. You're going to go to the one that says 5%, 3%, or I just said 3%. You're down a total of 3%. That's what I just said. Sorry. You're going to go to the one that says 3% total, right? Right here, 3% total. You're going to want to use the very next one, this risk, and you must win back half of 2%, which is 1% or $500 in this example with a 50K account, but specifically 1%. You want to win back 1% in order to revert back to 0.5% risk. Once you win that 1% right here, let's say that you risked 0.25% and you hit a 1 to 4 R, beautiful trade, right? You make that 1% risk back. Now you can revert back to 0.5% risk. Now you make your way from here from this line right here. Oops, let me go ahead and just press back on that. You can make your way back from this line right here, all the way back up here to 2. Boom. Where you're down in total 1.5% total right here, okay? So that's how you're going to be using it, okay? This is how you want to be approaching it specifically, okay? So this is how you use it. You just want to pay attention to what you're down in total, okay? What you're down in total, let's say that you're down 1.75% total on your account, right? Now, right here, go to the next one. Your risk on the next trade should be 0.25%, and you must win back half of the 0.75% loss. So pretty much is 0.38%. Right here, this is where you would pretty much, if you hit a 1 to 2R, you'll be able to revert back to a 0.5% risk next trade, okay? So really just pay attention to the total down, look for that on the chart, go to the next line, and that's going to be your risk. And this is how much you're going to be needing to make in order to revert back to that 0.5% and dig yourself out of the hole. Let's say that you're only down 0.5%, right? You just got to make back half of this 1% loss, which is 0.5%. As long as if you risk 0.5% and you hit a 1-to-1 R, your next trade, you could take a 1% risk. Okay? Do that, you guys. So I hope that answered your question, my man. I hope that was a little more clear, but that's the way you approach it. Now, ICT Silver Bullet, we're about to get into this. What he said, quit your job in 90 days. This is the ICT Silver Bullet. I'm going to backtest as many entries as TradingView will allow me to go back in time. Right now, we are bring this specific chart up. You want to go to futures. You want to type in ES, and it's going to be the E-mini S&P 500 futures, and you'll see CME mini, okay? You're going to bring that chart up. This is that chart right here. Now, another thing you also want to make sure you have, let me take the replay tool off. Another thing you want to make sure you have is your time set to New York. If you do not have your time set to New York, if you're in like Phoenix, if you're in San Salvador, simply click this time zone here and change it to New York, okay? Then go up here and press save. You will save your time. Your chart will look the same as mine, and you can go back and you can do this too. So right here, time. You want to begin on the 1 minute. And you can do this on the 1 minute, 15-second, 30-second time frames. However, I'm sticking to the 1 minute. I feel like the 1 minute is already fast enough. And to be reacting on the 15-second and 30-second, it's a little challenging, especially because I've never done it in my experience, but it's totally up to you. Backtest this on those lower time frames if you'd like, and see if you're profitable there. But I'm gonna stick to the 1 minute on this one, and we're gonna delineate New York time, 9:50, 10:10, 10 o'clock, and 11 o'clock. Okay, the 9:50 to 10:10 window is our time window we want to see the run on liquidity happen. I'm going to try to develop some specific rules to prevent more losses. And in this video, I want to really just, what's the word that I'm looking for? I really want to stay consistent on the run coming in that time window, the 9:50 to 10:10, because that's what ICT says. A certain macro, a small macro, which macros, like there's a large algorithm and then there's macro algorithms. So like there's a small macro algorithm that begins at 9:50 to 10:10 that actually runs liquidity at that specific time. So we want to see that run. And if that run doesn't come within that time window, then there is no setup. So if that run comes at 9:49, or if that run comes at 10:11, that is not a valid setup for me. However, I'm still going to document them here. So that way we can reassure ourselves if we can be looking for liquidity runs within that window, or if it's okay for it to be outside of that window. And then from 10 to 11 is our time window that we want to take an entry. Displacement can come before 10, and that's okay, but the entry must come between 10 and 11. Again, I'm also going to, so we can reassure ourselves if the entry outside of 10 to 11 is okay, or if the entry must be from 10 to 11. Then we want to look for that liquidity, of course, from 9:50 to 10 is our time window. So we're going to annotate the liquidity there, and then we're going to look for displacement. So let's go ahead and do that first. We're going to do this, and we're going to go back as much as we can. Now, this video is going to be super long, you guys. It's going to be very long, but if you don't want to sit through it regular speed, there's that setting on the bottom that you can actually, on the bottom of the YouTube video where you could speed up the video. So that way it's not normal speeds. Or if you'd like, you could just skip to the end and see what the results were. And if you do so, be sure to drop a like on the video, you guys. The YouTube algorithm really appreciates it. Let's get this video to as many people as possible. And also, we have a free Discord. I'll leave the link down below where a lot of ICT students, inner circle trader students, we're all in there gossiping, not just gossiping, but we're actually putting together our brains and developing these systems to what ICT expects of us. So go check it out. The link will be down below. You can join it. It's free. No worries about that. But first setup, this happened Friday, okay? And today is Sunday, April 16th. This was Friday, April 14th. From here on back, we're just going to keep going. I might not talk too much because this is going to be a long video, but run on liquidity here. Boom, within that macro, the 9:50 to 10:10 time. Here's a displacement. It came before. Came in our time window from 10 to 11. 5 handle stop. 5 handle take profit. Half of our position comes off here, and then we target opposing liquidity. You can see all that was ran out down here. Opposing liquidity was ran out, about a 1 to 4 R. So what we're going to do to keep track of everything, we're going to do wins, losses. A win will count. Wins count if we hit a 1 to 1 R. Okay. So right here would be a 1 win. And we'll just annotate that it hit 2 R, 1, 2, 3 R, 4 R, 2, 5. Okay, we're gonna annotate so we know the average risk to reward that it hits. So it hit this one time, it hit the 1 to 2 one time, hit 1 to 3 one time, hit 1 to 4 one time, and if we wanted to hold it longer, you already see that it hit a 1 to 5 as well. Yeah, 1 to 5 was hit too. So we're gonna annotate all of that. Okay, so far we are 1 win, 0 losses. Okay, for this one, and so far we're gonna annotate. Or you know what, we're gonna annotate it here. I'm gonna put this setup price without liquidity. Macro. Okay, so we have that annotated. We know what happened there in that one. Okay, so let's go back to the next one, which would be Thursday, because on Friday we're gonna go to Thursday. Okay, we're gonna annotate the 9:50, 10, 10, 211. I know this is hindsight, you guys, but we want to get some real legit results on this strategy, not just on what we think, but on the facts. Like, it's factual that there was a setup here. It's a fact, not that it was like, oh, our eyes didn't see it, so there was no setup here, even though there was a setup there. We got to base it off of facts to know exactly the win rate on the strategy. So from 9:50 to 10:10, we see the run on liquidity happen here. Boom. You see this movement, but there was no displacement that created a fair value gap. You can see, unless, yeah, there's a tiny little fair value gap here actually with this candle. So we'll count that. Displacement happened here. Right there. Okay. So, and I moved the 10 o'clock line. Where did I put it at? Oh, well, I'll just re-annotate it. 10 o'clock. And the entry came. So the displacement came before 10. The entry came right after 10. It happened at 10:02. 5 pounds. When a 1 hour was hit. 1 to 3 hours hit. If you held it, could have went for more. 1 to 4 hour was hit. If you held it, a 1 to 5 hour was most certainly hit. So we'll annotate that a 1 to 5 hour was hit. So we got 2 wins. 2, 2, 2, 2, 2. And then we're gonna write go to the previous day, Wednesday. It's gonna be a long video, y'all, but I believe we're gonna learn a lot together. Okay. Where's 9:50? 9:50, 10 o'clock, 10:10, and then 11 o'clock. And this over here with this. So in this time, right here, 9:50, I see run on my side. See if we consider this liquidity and then it ran out there. Or if we consider this liquidity and then it ran out here. So let's just say like, because there is no run on liquidity here. So if there was a run on liquidity here, waiting for displacement, here's displacement, and then another run on liquidity. So like, let's say that we took entry right here, right? Because the run on liquidity happened in our 10:10 to 9:50 window, and then displacement happened outside of that window. Displacement happened within the 10 to 11 window, and the entry came in. So this is still considered a valid setup. We don't have any rules around the displacement. So let's just put like a 5 handle stop. Ooh, we didn't get stopped out. It did run on liquidity again though. Now, let's say like spreads didn't get us. Like, you guys tell me, should like, I don't know if we should count this or if we should. I don't want to count it because liquidity didn't really, it didn't run the stop loss, right? But at the same time, I'm assuming spreads, so I'm gonna just count it as a loss. So we'll just say 1 loss, okay? We'll say that spreads got us here. It's just a little too close. And then you could see after that run on liquidity, because it obviously ran out liquidity with this wick. After that, displacement, and you can see right here, there's a couple of fair value gaps. There's 1, there's 2. Now, one of the homies said whenever there is more than 1, you could use a Fibonacci so you can know your equilibrium, premium, and discount price. However, as I was backtesting this on my own time, I noticed that price will sometimes just tap this one right here. Won't even bother with this one and it'll just fly away. Now you can you can put that into your rules where you want to use that, and that's totally fine. This is where we're all going to differ as traders, but me, I'm personally going to stick to the primary fair value gap. So I'm going to put my entry on this one. Where's the 5-handle stop at? We would have got stopped out, right? And in this situation, he would have been correct, and that's okay. Let's say that we added that fib, right? And you can see that it went up into a premium, likely an optimal trade entry. You know, let's say that we took an entry there, right? Add handles, and we hit that. And then even if we held it, it hit a 1 to 5 R. So what I'm going to do for this one is I'm going to count the 2 losses. Okay. So now we're at 2 losses, and then I'm also going to count the win. Okay. Because a lot of us will probably be, wait, what was it? Yeah, it was 2 wins. That's right. A lot of us would probably still be looking for the entry, especially if it was just after a run on liquidity right here. So if we see a run on liquidity, of course, we're going to look for that entry after the displacement. So a lot of us will likely still be looking to take entry. And let's say we got stopped out here. There's that fair value gap. Say we re-entered, because I'm just thinking how I would think. And this is how I would think. And you can see here that we won that one. So we'll annotate a 1 to 3 or 1 to 5. Got hit 3 times. We've taken 2 losses so far. In this one, we're going to annotate that there was 2 runs on liquidity. First one in the macro. That setup first. Second one came outside the macro. Primary FBG got us stopped. Secondary FBG was a winner. So we got it going like that. Now let's go to the previous day. Now, again, you could be the type of trader that takes this 1 trade per day. You don't even want to bother taking more than one. You know, that's where we all differ as traders. But I'm just sticking to the facts here. There was a fact that there was a setup there. And as long as you stood on your charts and you know, everything stood valid, want to take it. Again, we don't know what rules make everything valid, but that's why we're doing this video, so we know. 211. Boom. Okay, now if we notice here, now another buddy said, commented that if you don't see a run on liquidity, it's possible that there's some SMT divergence at play. And of course, those are the type of setups that you want to take entry on the most. But I can agree on that. But if we want to keep it simple, like we are in this video, we're gonna find out the win rate here with all of these rules, and then maybe next video we could apply some SMT and see if we can better our win rate. But we see a run on liquidity here. There's a small little fair value gap right here between this and this. Let's say we took that entry. Right? Tiny fair value gap, but it's still a fair value gap, right? So we have the run on sell side liquidity here between the macro, the 950 to 1010. We got displacement, and we have entry from 10 to 11. So let's take entry here. Boom, missed handle, 5 handles. If we hit at least 5 handles. No, this one got stopped out actually. Okay, so this was a loss. Now again, you might have not taken that entry, right? you might have been like, nah, that fair value gap was too small. Let's annotate that. Loss, very small fair value gap. Liquidity, macro, entry, 10. Okay. Now let's say I ran out like all these relative equal highs here, right? Once it did that, the run on liquidity still technically came within that 950 to 1010 macro, okay? Run on liquidity happened right here, and then there's some displacement here. So you entered there. This one would likely be another, or this one was a winner. This one was actually a winner. We didn't get stopped out. Yeah, this one won. So in this situation, if you had a buy-in and then this came, you could close that sell. You could close it, and that wouldn't have been a loss for you. You would have been closing it like in a little bit of profit. It would have been a break-even trade. But if we're sticking to the facts, I'm gonna leave it as a loss. And I'm also gonna annotate this one as a little win. It hit a 1-to-1 R. It didn't hit any more than that. So we'll annotate the win. Or wins, we'll annotate the 1-to-1 R here. Okay. No, but second entry run for liquidity came in the macro. So we got that. Now let's go to the previous day. This was Tuesday. Let's go to Monday. Guys, let me know in the comments down below if you guys would have taken those entries, what entries you wouldn't have taken and why, please. So we can make this, a lot better for ourselves, and, we can all chase some funding together, feel me? But let's go. 950 to 1010, 950 to 10, 1010 to 11. Okay, so right here, where's the run on liquidity within this window? Right here. Here's the run on it. Boom. Where's the displacement? Here's displacement. First fair value gap. Second. Here's the third. So we're going to take entry off the primary. It would be this one. So we'll take entry right here. Stop, handle, stop. We would have kept holding. We would have hit a 1-to-2. We'll annotate that it hit a 1-to-2. So we won here. That wins. 1-to-2 hit 5. 4. That's it. You can see here that it ran out liquidity here, but it didn't come in the macro. You can see if we would have added a line right here. I mean, liquidity run came right here, but there was no displacement that created any fair value gaps to the bottom side. So right here, all it hinted was bulls, all it hinted was bulls. It made relative equal highs, and then it ran it out. Actually, it did run it out in the macro. And it just here. I mean, man, that's risky. That's where rules need to be applied, so that way you can keep yourself out of those kind of things too. So in this trade, we'll annotate run macro, in the macro, Or maybe we want the displacement to be in the macro too, or the window or something. As I go back and rewatch this video, I'll make those adjustments for myself too and come back with another one and let y'all know what I found. But let me know what y'all found too, you know. This was Good Friday, so I don't think, yeah, we weren't gonna find nothing on Good Friday. Let's go to Thursday. Nothing on Good Friday. It was a holiday. Oh, there's 9:50. This was Thursday, 9:50 to 10, 10. Keep in mind too, we're not paying attention to any news at all. You want a really legit back test? Gotta pay attention to news too. And news, that's a whole another factor that'll play in, that'll take a long time too. But let's see, 9:50. There was a run on this liquidity. There was a run on this liquidity that even came before. See, in this case, it's possible that there was some SMT divergence here. But we had a run on liquidity outside of the window. We had a run on liquidity inside the window right here. Well, while the macro, not the window, while the macro started, we had a run on liquidity in the macro. And then there's a gap right here. So we would have taken entry off that gap, right? Anticipating some sell side. Obviously, we would have lost our asses. So we're going to count this as a loss. This is a legit loss. Why are you counting that a loss? Well, because in hindsight, we obviously see it's a loss. But if we were to bring back price right here, and we seen that run on liquidity right there at the macro, and then we're looking for some displacement, we're like, okay, that created a fair value gap right there with this candle. I mean, it's not a huge displacing candle, but it created a fair value gap, right? So we also got to back test more after this video to see with the displacement candles, how many handles we want them to preferably be, or how big we want them to, be in order for it to be a legit like setup for us, We want to have all these rules to prevent us from taking losses like we do here. As let's say we got triggered in and we lost, right? Had no run on liquidity. There's possible SMT divergence here, and I'll annotate that. And as we go back after this video, I'm gonna upload this video. Then I'm gonna make another video with all these entries and everything still on the charts, and we're gonna go back and we're gonna measure the displacements, as well as we're gonna identify some potential SMT and see if we could have prevented some losses or added to our wins. So right here we're gonna say that window. And what this means is the liquidity run came in the macro, the entry came in the window. Or actually, no, it didn't, you guys, 950. The entry didn't come in the window. Entry didn't come in the window. Come in the window. That's a good catch. I'm glad I caught that, because somebody in the comments would have been like, ICH, you hot shot, you messed up. And I would have right there. That would have sucked. But keeping it legit. So the liquidity run came in the macro. The entry didn't come in the window. There was no run on liquidity. There was nothing here, in my opinion. Let's see if it ran out any more liquidity to the downside or anything. It ran out a bunch of buy sides, but wasn't much displacement that came. Not. So like, let's say it ran out some liquidity here. Not even there. I don't see nothing unless you counted this liquidity here. But again, it's outside our macro, so we're still going to count this as a loss. A loss because the entry didn't come in the window. Now here, I'm like, do I want to count it as a loss? I don't want to count it as a loss. How many losses do we have before this? Was it like 3 or what? Was it just 2? I gotta delete all of this in order to find out. The struggle is real right now. I'm sorry, y'all. Again, you could fast forward this. Did I count it? No, I didn't. I didn't count it yet. No, I gotta put all that back on. It's not even letting. Where there it is. Okay, so we're not gonna count this one because the entry didn't come in the window. Okay. So we're gonna leave this one and we're not gonna count it. Now let's go back to Wednesday. I hope I didn't count it. If I counted it, y'all, whenever we go back and rewatch this video, if I counted it, then at least we'll know that it's one less loss instead of the number that we have on the screen. We'll know that it's 2 losses and not 3, but I hope I didn't count it. Okay, so right here, we're on Wednesday, 9:50 to 10. 10:10. See what happened here. There's a run on liquidity on all this liquidity here. There's a run on liquidity outside of the macro. Created these highs right here, these little ones. And then inside the macro, I ran that out. No displacement there. Displacement. Nope, there's a fair value gap here, but oh, there's a fair value gap here as well. But after that run on liquidity, we don't see displacement. Oh, look at there's this wick right here, actually. Look at that wick. Boom, run on liquidity right here. Ran out liquidity, displacement down, fair value gap right here. Fair value gap, tiny one. There's another fair value gap, tiny one. And there's this fair value gap, another small one. So right here, this is the video that I think Kim was like, there's 3 this was a setup. I mean, that Kim was like, there's actually 3 fair value gaps there in that one, and I see them now. I only seen the 2 before, but now that I'm going back through it right now, I see the 3. But let's say that we got stopped out here off of this primary entry, right? Now, again, you could use the fibs and you could have probably just took entry off of these ones, but I'm just being, myself, this is how I would approach it because I've seen it happen, and we're probably going to run into a situation where it does happen, where it'll just tap this one and then keep going. But in this one, we'll consider this a loss or losses. Again, though, did it come in our window? It did come in our window. And then right here, see that we took entry off of this one right here. Boom, five handle stop. And this one was a winner. How much did it hit? Hit a 1 at 355. Obviously, I wouldn't want to keep holding it because it would have took us all the way back down to a 1 to 1R. Now I've been kicking myself in the butt. So let's just say that we held to a 1 to 3R, right? This one hit a 1 to 3. So we'll count a win and a 1 to 3. So 6 wins and a 1 to 3 hit. 6, 5, 4. So far, it's demonstrating to be a profitable strategy off of 10 entries set up so far, 6 wins. It's about a 60% win rate. And so far, if you would have held for a 1 to 5R, you would have been you would have hit 3 of them. That would have been 15%. 4 of them, 4, 8, 12. It would have been at 12%. 3, 4 wins out of 1 to 3. So that'd be at 9, 12. This would be a 12% too. So 1 to 4 and 1 to 3 are tied up. 1 to 5R is winning. And 1 to 2. This is 10%. And then this is obviously 6%. So far, it's showing to be profitable to hold for a 1 to 3 or a 1 to 4R. Okay. Now that was that setup. No. There was also this run on liquidity here, but I'm not going to count it or anything because it didn't come in our window, in our macro window. Okay. So I'm going to leave that alone. And I'm going to consider that we finished that day off. Okay. Of course, you could have entered on it too, but that to me would have been a second setup, not a primary setup. So now we're going to Tuesday. If that makes sense. I hope that makes sense to y'all. Because I was thinking about it in my head after I just said it, and I'm like, does that even make sense? I hope that makes sense. 950 to 10 to 1010 to 11. Right here in this window, we see the run on liquidity right here. Right gap here. We get our entry at 10:04. So everything was followed here. Boom, 5-handle stop. Beautiful setup. This one was phenomenal. This one was so good. 1 to 5R hit. Beautiful setup. This one was bad. That was so sick. 7 wins. 7, 6, 5. That was a badass setup, you guys. This setup right here was sick. This one, if man, whoever caught this one, I'm sure somebody might have caught it. If you caught it using that silver bullet, that's tight. That is tight. Okay, right here. Here we go again. 15 to 10, 10, 10 to 11. And what run on liquidity happens right here in the macro? How big is that way? There's this run on liquidity. There's this displacing candle. Could have taken an entry and we would have lost. This would have been a losing day. There's even a smaller one down here, but we'll say that we took entry off of this one as soon as this candle tapped it. Yeah, that's that one. And then ran liquidity out here. Small fair value up here, tiny, tiny, tiny. Let me annotate this last year. 5 losses. There was a run on liquidity that happened right here. Ran on liquidity to the downside. And then you could see that it had this displacing candle right here, created a tiny little fair value gap, very tiny, very, very small. See that it came back and tapped into it just to fill that gap. Let's say that we took our entry right there. Now right here again, we likely would have got stopped out right here due to spreads. But if you didn't, and you seen this setup happening right here, and it came back down here, you could have exited this at break even, and it wouldn't have been that big of a loss. But that's your trade management, your position management. That's how you would have traded and handled it. But for this video, we're kind of treating it like we're a robot. this is how like an algorithm would have probably processed this. We had a run here, we had an entry here, then we had another run here, displacement with a potential entry here, and that came in the window. Now again, or actually, you guys, another good catch. What a tonto. Another good catch. This actually wouldn't have counted. Boom, because entry didn't come in the window. Nice. So we're actually going to take that loss away. We only got 4 losses, you guys. So good catch because the entry did not come from 10 to 11. It did not. Okay. So right here, you see that we got an entry from 10 to 11. This is our setup. We ran out some sell side liquidity right here with this swing that pushed to run out buy side. Ran it out, sell side liquidity taken. Displacement for value got entry 5 handle. 5 handles. It hit a 1 to 2R. And then it melted. So we will annotate the win. 8 wins and a 1 to 2R hit. For this one, we're gonna write entry came in the window. Liquidity run the macro. This is why rules are very necessary, you guys. If we didn't have that rule of taking the entry from the 10 to 11 time, we would have got fucked right there. So make sure that you have rules, okay? Based approach will always keep you from taking certain losses you should have never taken, you know? Okay. So right here, $9.50, 10.10 to 11. Bring this down here with this. What do we see? Gosh, this is a sloppy day. Ugh, looks so ugly. Let's see. So in this window, what do we see? We see a run on sell side here. Consider this a gap. There's no gap there. Run out. Buy side here. There's no displacements or nothing, dude. There was no setup on this day, you guys, in my opinion. Between the macro, there was runs on liquidity, but nothing that created displacement telling otherwise. You can see there was displacement here. Finally, I mean, if you would had it right here, there's displacement here, and you could possibly take an entry off of that. I'm not gonna. One would have been a nice winner, but I'm not gonna add it to our results here because it didn't follow the rules that we have set in place so far. So we'll say outside of macro. Let's go because that was Friday. Go to Thursday. So far, we're on our 3rd week of back testing. So far, this is 3 weeks. So far, in the past 3 weeks, we're coming out very profitable doing this setup. Okay, so Thursday. To 10, 10, 10 to 11. I don't know if you guys hear all the vibrations in the background. My phone is going off the Discord chat. They just love talking to each other, communicating and building this system to where it's just, you know, it's ridiculous. So if you guys want to join that, go join that. The link is down below and it's free. So go check it out. You can see that the run on liquidity happened right here. Here's relative equal lows. Look at engineering liquidity to be targeted. Wow. Look, this is awesome right here. This is price engineered liquidity right here to be targeted for opposing liquidity after a run on liquidity happened right here. Run on liquidity happened with all these highs right here. See how that wick took it out? So after that, you can see the displacement. And here is an example of what I meant earlier, you guys. Right here, you can see that there is this fair value gap here. And there's this fair value gap here. You can see that price just taps this fair value gap and takes off to the downside. It doesn't come up to the secondary and it doesn't retrace into a premium either or anything like that. So let's just put this 5. And we got our 1-to-1 out of it. So we got our 1-to-1 out of it. This was a winning trade. Liquidity run came in the macro window. Entry came in the regular window. So we'll mark 9 wins from 8. Oh wait, no, it didn't hit a 1 or 2. 7, sorry. So if we go back, this was Thursday. Here we are, Wednesday. Ten and 10. Plus it's 2. 11. So the run on liquidity happened here. Beautiful setup again. This is an awesome setup right here. Run on liquidity happened here. Displacement, creating the fair value gap. 1. 5, 1. One to 2. So it's a nice setup though. It was another nice setup. 10 wins. 10. So right here we'll annotate. Again, I'm gonna go back and see the displacement, see if there's any like way to like reduce losses. Wait for a certain amount of displacement, or there's SMT that can add to our winners, things like that. But for this video, just keeping it very simple. We just kind of want to know what we're dealing with here first. I'm happy that we've only taken 4 losses, though. This is awesome. 950, 10, 10, 10. See what happened here. Liquidity run happened here. Yep. There's a liquidity run. This one's going to be a loss. Liquidity run happened here. Displacement. Entry in the window. That's how we stopped. It's a loss. So we're gonna annotate that. It's a legit loss. Or wait, why did I put L? Let me just put a 5. 5. Okay. And then it did another liquidity run in the macro. But it also did a liquidity run down here in the macro too. Ran out liquidity and then it started displacing up. Again, Once it started displacing up, created a fair value gap here. No other fair value gaps, never tapped it, so there was no entry there. It ran out of liquidity here. To the upside, displacement was right here. And it created this small little fair value gap. Let's say you took a sell off of it, 5 handles. Target, a 1 to 3 R was hit. So this is a win, 11 wins. 11, 9, 6. Okay, to Monday. Fifty, 10, 10, 10, 20 down. Window. No liquidity that happened outside of it. Set up here. We follow the rules that we had in place now. There is no setup here. However, if you were looking for the liquidity run outside of the macro, the small fair value gap right here. And look at here's another example of that one that I was telling you guys. Sometimes it'll just tap this small one. The one you can retrace up into the 50%. We added a Fibonacci right here. It doesn't retrace up into it. Even if we extended it, it taps it, and it taps it. Barely though. It doesn't go into premium or anything. But again, that's if there's like 2, of course, but the entry even came outside of the window, unless you waited for the window to enter. So there's no setup here for us. I'm gonna go back to the previous day again. It's Monday. So now we are in our 4th week of testing. Oh, look, it doesn't really go that far. Let me see. Looks like that's it, yeah. Don't bring up any more time. It looks like it only allowed us to go back 3 weeks in time on the 1-minute time frame to backtest this. And in that 3 weeks time, let's say we would have taken a funded challenge, right? In that 3 weeks time, you would have had 11 wins and only 5 losses. If you hit a 1 to 1 R, you would have been up 11%. You would have won 11%. Now minus a 5, you would have won 6% on the account in 3 weeks. Okay, you would have been up. If you're targeting a 1 to 2 R, and let's say you're not taking any partials at 1 to 1, if you're targeting a 1 to 2 R, not taking any partials, you would have been up 18% minus the 5. You would have been up 13% with the 1 to 2 R, not taking any partials, okay? Not paying yourself as a trader. At a 1 to 3 R, not taking any partials, 3, 6, 9, 12, 15, 18%. You would have been up 18% here, same as a 1 to 2 R. Minus a 5, you would have been up 13%. So it's the same as 1 to 2 R here. 1 to 4 R, 4, 8, 12, 16%, and 1 to 5 R is 15, 20%. So 1 to 5R so far takes the money, but that's really risky. For this specific setup, I would probably recommend targeting a 1 to 2R. Now, let's say that you took partials at 1 to 1, right? And you're risking 1%. You took partials and now you have 0.5% running, and then you targeted a 1 to 2. That would equal you a 1.5% winner in total. So let's say you did that every time. So 1.5% times 9. Let me bring down the calculator, honestly. Let's go. 1.5 times 9. You would be up 13.5%, targeting a 1 to 2R. Minus 5, 8.5%. Okay. And then if we go for a 1 to 3, if we just took partials at 1 to 1 and then left the rest running for 1 to 3, that would be 1.5. And then right there would be another 0.5. Right, because 1 to 1 would be at 0.5%. 1 to 2 would be 1%. 1 to 3 would be 1.5. So you'd be a total 2% winner because you already got 0.5% stash. So 2%. So 2% times 6. So 2 times 6 equals 12 minus 5 equals 7. So realistically, you'd probably be better off going for a 1 to 2R. You'd probably even be better off going for a 1 to 2R without it taking any partials. Because as you see, we only lost 5 times, even when we wouldn't take partials. So I think for this setup, it's probably best so far based off of, I would have to get another platform to backtest longer, but based off of these 3 weeks of backtesting, it's better for you not to take any partials at a 1 to 1R. It's better for you to target a 1 to 2R, and that will likely pass you a funded challenge. It will pass you a funded challenge based off of what we just broke down and calculated. So I hope this video was valuable. I believe it is. I'm going to go back through again and identify, see the displacements, see if any displacing candles, if there's any like measurement that we would want to apply to stay in a rules-based system. Also, if there's any SMT divergence that would also keep us out of certain losses, or maybe add to potential winners. There could possibly be 13 winners in this using SMT. Never know. But I hope you guys found this video valuable. Again, there's a free Discord down below. Go check it out. Go join. And until next time, hot shot out, you guys.